going? Hope it's been profitable. My week has been profits back to back, back to back. If you joined the weekly session and the session we had on Tuesday, and you're trading Euro Aussie, Australian dollar USD, you should be in good profit. You should be in good profit. As you can see, I am still holding Euro Australian dollar and Australian dollar USD trade. I already closed partials on this trade, and you can see I've adjusted my stop loss to break even. I had closed partials. I traded with a zero point 0.2 lot size on this account, and closed on 0.1 lot size, which is half of the lot I used on this trade. And I'm hoping that this is my target for Australian dollar USD. I'm still bullish on Australian dollar USD. Now, where prices at the moment, anything can happen. Price can pull back from that level because it's at a premium level right now, right? It's at premium. If you apply your Fibonacci, take it from the swing high to the swing low, you would see that price is at premium. So there's a high probability for price to start pulling back from that level. As you can see, the previous candlestick that formed, you can see it's a shooting star, a bullish shooting star. So after the formation of a bullish shooting star, we wait for the next candle to close bearish before we go selling Australian dollar USD. If this next candle, the current candle, closes bearish, then you should consider selling Australian dollar USD. But remember, tomorrow is NFP. Okay, so if you're trading Australian dollar USD, if you're trading any of the USD pairs, you have to be very conservative. You have to be very conservative. Okay, so technically, if a bearish candlestick closes, okay, after this shooting star, then we can go bearish on Australian dollar USD. Also, you would notice that we had a fair value gap here, right? You can see this fair value gap. Can you see it? And that gap has been filled. That's another reason AUD USD might go bearish from the current market price. Okay, because a fair value gap has been filled, and the pattern that formed inside that fair value gap is a bearish reversal pattern. Okay, so that's my take on Australian dollar USD. Like I told you guys, my bias for the week is bearish on Australian dollar USD. I'm thinking NFP, okay, would push Australian dollar USD down. Okay, I believe NFP is likely going to give USD the momentum. It's going to give USD the strength required to go for you Australian dollar USD to go bearish. That's my take on Australian dollar USD. You shouldn't buy Australian dollar USD at the current market price. Don't buy Australian dollar USD at the current market price. It's very risky to buy. This is where you ought to have entered buy on Australian dollar after the formation of this doji. If you had missed the opportunity here, you should have entered buy from this point. So entering a buy at the current market price is at a very high risk. Don't buy Australian dollar USD unless you're comfortable with taking high risk. Okay, so look for a sell opportunity. Look for a sell opportunity on Australian dollar USD. Okay, let's move to Euro Aussie. I still have a trade also on Euro Aussie. As you know, Australian dollar and Euro Aussie are my preferred pairs. Okay, so let's see Euro Aussie. On Euro Aussie also, you can see I have made good profit on Euro Aussie. I closed half of this trade. Okay, I executed with 0.2 something, and since the trade is in profit, I had to close some of the profits. I had to close partials, and the next thing I did was to adjust my stop loss. You can see now my stop loss is below my entry. So if price decides to pull back, I will still be in profit. I will still end in profits. You can see my stop loss has been adjusted to this level. So my bias on Euro Aussie for the week is bullish, but I was expecting price to pull back to a discount level. Let me apply the Fibonacci tool. I was expecting price to pull back to a discount level before going bullish, and that is the reason I sold Euro Australian dollar. I wanted price to drop to a discount level before going bullish on Euro Australian dollar, and you can see it is below level 50, which is a discount level. Okay, but my target is level 75.0. That's my target, because as you can see, we had a fair value gap here was created, and that gap is yet to be filled. Though price is inside that gap now, but it has not filled the gap entirely, you can see. So I'm expecting price to fill this gap. So this is my target on euro, Australian dollar, USD. But if a bullish candle closes above equilibrium, above level 50, I'm going to close this trade. If a bullish candle closes above this level 15, which is equilibrium, I'm going to exit this trade on euro Australian dollar. So I'm still bullish on euro Australian dollar this week. So probably maybe tomorrow I will be considering buying euro Australian dollar, depending on the candlestick pattern that forms at the discount zone. I hope that is clear. Okay, if there's any pair you want us to analyze, you want me to analyze, please drop it in the comment section. If there's any pair you want me to analyze, drop it in the comment section. You're welcome. So let's move to the next pair. GJ, a few days ago I told you GJ is bullish, but yesterday GJ sold. Okay, I had a trade on GJ a few days ago, and I think I closed the trade with just few pips. Immediately I saw this pattern, this pattern that looks like a spinning top, or you call it your shooting star. Immediately I saw this, I knew GJ is likely going to go bearish to fill a fair value gap. You can see we had a fair value gap here, so I was expecting GJ to pull back and fill that fair value gap, and you can see that is what is playing out. Okay, that's what is playing out. So I've exited the trade on GBP JPY. I'm waiting for a bullish setup, okay, on GBP JPY. So I'll be going I'll be going long on GBP JPY, but I'm still waiting for a bullish candlestick pattern to form on H4 time frame before going bullish on GBP JPY. So GBP JPY, my bias for GBP JPY this week is bullish. And if I'm buying GBP JPY, my first target for the week will be this. There are a lot of stop losses at this area that I believe need to be cleared. So that is where I'm going to set my take profits, which is about close to 200 pips. And my risk on the trade shouldn't exceed 70 to 80 pips, and I'll be aiming for 200 or 200 and something pips, which is good risk reward. Okay, so that's my take on GJ. I am bullish on GJ. Okay, let's look at GU. If you're in the VIP group, I posted video on GU this morning. Okay, my take on GU. GU is still likely going to go bearish. The pattern we have here is a bearish pattern. This is a bearish pattern. We had a spinning top here, and the next candle closed bearish. So right now, GU is bearish. GU is bearish. If we apply our Fibonacci 2, let's take it from this swing high to this swing low. You can see that price is now at premium, right? Price is now at premium. So you should be considering selling. You cannot be buying GU at the current market price. This is where you ought to have bought GU after the formation of this engulfing pattern. This would have been the best entry for GU, and now the market is trading about 30 something pips. It actually did over 50 pips above the entry level. So entering at the current market price, buying GU at the current market price will be at a very high risk. Okay, so you should look for sell opportunity. One, GU is at premium. Also, it's just filled a fair value gap, okay, on 1 hour time frame, 3 minutes time frame. So it's best to look for a sell opportunity on GU than buying on GU. Buying GU is at a very high risk. Okay, so that's my take on GU. GU is what? Is bearish. GU is bearish. Okay, you could wait for the news that will be released, I think by 2 p.m. or 1:30. Okay, a major news will be released. Let me check the calendar. A major news will be released by 1:30. 1:30. Unemployment claims will be released by 1:30. If it comes out positive for the dollar, then you should go bearish on GU, AU, NU, and EU. If it comes out positive, as you can see, the forecast is 212, the previous is 207. If the actual value is higher than the forecast value, then you should go bearish on AU, EU, NU, E, and GU. Okay, so that's my take on GU. So technically, we have a bearish setup on GU. So wait, you could wait for the major news to be released. If the major news is positive for dollar, then you should go bearish on GBP USD. I hope that is clear. I hope that is clear. If there's any pair you want me to analyze, drop it in the comment section. Drop it in the comment section. Please, if there's any pair you want me to analyze, drop it in the comment section. I'm not seeing your comments. I want to believe you all can hear me. I want to believe you can hear me. Okay, let's look at gold. What's happening on gold? I also sent this to my VIP group this morning. My thoughts on gold. I think I dropped a video yesterday night on gold. Let's see gold. My bias for gold this week is bearish. Excuse me. So my bias on gold was this week was bearish, but I was expecting gold to pull back up to fill this fair value gap. That was my expectation on gold, but it actually didn't pull back to fill this fair value gap. Okay, that was my expectation. I was expecting gold to pull back and fill that fair value gap, but what happened? It just pulled back, tested this previous resistance. Okay, tested this resistance, and there was a strong rejection from that level. You look at the pattern that formed at that resistance. Okay, look at the pattern that formed at that resistance, and this is a spinning top. Spinning top. The next candle also closed as a spinning top, and you can see that's the reason gold went bearish. This was on Tuesday. Yeah, Tuesday. You can see the reason why gold was bearish on Tuesday. This bearish reversal pattern. You can see. So what happened yesterday? Yesterday was Wednesday. You can see it was bullish. And I think the reason for this pullback was to fill a fair value gap. Let's go down to 4 hour. I'm sure a fair value gap was created after the close of that. So I think the reason price pulled back was to fill. You can see this fair value gap here. Can you see it? That was the reason price pulled back. So you can see immediately price pulled back into this fair value gap. See what played out? We had a spinning top after the formation of this bullish candle. This candle that filled the gap. The next candlestick that closed as a spinning top. You can see this is a bullish spinning top indicating that the buyers are becoming exhausted. But before you execute a trade, you need to wait for the next candle. If this candle, the body of this candle, this spinning top was bearish, we would have executed sell after the close of that candle. But because the body is bullish, this tells us that we still have buyers in the market. Buyers in the market, and these few buyers can still keep pushing the price up. So before we sell, we want to be sure that we have sellers in the market. Very important. You want to be sure before you execute a sell trade. You cannot be seeing bullish candles. Bullish candles cannot be printing on the chart and you're considering selling. You have to wait for a bearish candle to close to confirm that you have sellers in the market before you execute a sell trade. So you would have waited for this next candle to close bearish, or this is 4 hour. You could go to 1 hour after the formation. You don't have to wait for 4 hour, because if you wait for 4 hour candle to close, you would have missed a lot of pips, right? You would have missed a lot of pips. That's why it's important to know how to use multiple time frames to analyze the market. You know how to do top-down analysis. It will give you an edge. Okay, so you after the formation of that spinning top, let's go down to 1 hour. Let's see the pattern we had on 1 hour. So you can see the pattern we had on 1 hour. We had a bearish reversal pattern. This was a spinning top. Then we had a bearish spinning top. So we would have entered sell after the formation of this spinning top. That would have been the best entry for gold. But if you had waited for 4 hour candle to close, your entry would be at this level. You can see the risk. You can see the difference. That's about 80 pip difference. You can see that. So you will be taking a higher risk if you're just focused on the 4-hour time frame, waiting for 4-hour candle to close. But if you had gone to 1 hour, see the pattern. This is a bearish reversal pattern on 1 hour. You would have executed the trade at this point. So at the time the trader is just focused on 4 hours, is entering a trade at this level, taking a risk of over 100 pips, you will be in profit, and probably you would have adjusted your stop loss to break even. You wouldn't be taking the risk on that trade anymore. But the trader is just focused on the 4-hour time frame, will just be executing a trade here, and he will be taking a very high risk. You can see. So you need to know how to do top-down analysis. You can't just focus on one time frame. Okay, you can't just focus on one time frame. So that is it on gold. Gold is still bearish. It is still bearish. Gold is still bearish. You cannot buy gold at the current market price. You cannot buy gold. Gold is bearish at the moment. I don't know if between now and tomorrow gold can pull back to fill this fair value gap. I doubt if that will happen. I doubt if that would happen. Okay, but anything is possible in this market. Okay, so right now gold is bearish. I cannot buy gold at the moment. I cannot buy gold at the moment. If I want to risk buying gold, let's go down to after the close of yesterday candle. Let's see if a fair value gap was created on 4-hour. Okay, on 4-hour, we had a fair value gap here. So if I want to risk buying gold, I want to see price fill this fair value gap. That was what I shared with my students last night. I think last night, yeah. So if I want to risk buying gold, I want price to drop to this zone, this fair value gap that was created yesterday. I want price to fill this gap. Okay, I want to see the candlestick pattern that will form inside this gap. If a bullish reversal pattern forms inside this gap, I would go bullish on gold. I would go bullish on gold. If a bullish reversal pattern form inside this gap, I will buy gold. Okay, but if the news favor the dollar, then gold remains bearish. Gold remains bearish if the news favor the dollar. But if the news does not favor the dollar and a bullish reversal pattern forms inside this fair value gap, then I will go bullish on gold. I hope you get that. I hope you get that. Do you have any question? Do you have any question? Please, if this is your first time participating in the live stream, please ensure you subscribe to the channel so that anytime I come online, you get notified by YouTube. Okay. And if you are getting value from this live stream, please like the stream. Like the stream if you are getting value. Okay. So that's my take on gold. Which other instruments do you want us to analyze? Which other instruments do you want us to analyze? Okay, let's say USD card, and this will be the last pair for today's session. USD card. Let's start with the weekly. Good. So this week, USD card has been bullish. That's my expectation on USD card. As you know, USD card is negatively correlated with GBP/USD. So if my bias on GBP/USD is bearish, then I should be considering buying USD card. So my bias on USD card is bullish for the week. Okay, if you had bought USD card on Monday, Tuesday, you would have made some good profits, and by now you should have closed partials, or you should have even closed the trade for the week. Okay, because of NFP. So let's go down to daily time frame. So you can see what played out here on the weekly time frame. A fair value gap was created at this point. You can see a fair value gap was created at this point. Price had to pull back to fill that fair value gap. That gap has been filled. Can you see that? That gap has been filled. The next draw on liquidity on USD card is this previous high. That will be the next draw on liquidity. So if you are buying USD card, this should be your target on USD card. This should be your target. Okay, this should be your target on USD card if you are buying. So if this week candle closes as an inverted hammer, if it closes as an inverted hammer inside this fair value gap, next week could be bullish. Next week will be bullish. okay, it would be bullish. So let's go down to daily. So you can see the pattern we have on daily here. This is an engulfing pattern. This is an engulfing pattern. And after the formation of this engulfing pattern on daily, let's go down to 4 hour. Okay, let's go down to 4 hour. I'm sure a fair value gap was created on 4 hour. So let's find the fair value gap that was created on 4 hour. Okay, we had one fair value gap here, right? But as you can see, that gap has been filled. Can you see that? That gap has been filled. Then this is the second fair value gap that was created. Okay, and you can see the pattern that has formed. Can you see? Price has tested this fair value gap. You can see what is playing out now. That gap has been filled. This gap has been filled, and you can see this previous candlestick pattern, right? We can call this an hammer, right, inside this fair value gap. So there's a high probability USD card is going to go bullish. If I'm going to take any trade on USD card, it will be a buy, and this will be my first target on USD card. Now, after the formation of this bearish hammer inside this fair value gap, because it's a bearish hammer, we cannot jump in and start buying. Like I said, you cannot be saying bearish candlestick can't be printing on the chart and you're considering buying. No. So because the body of this candle is bearish, we have to wait for the next 4 hour candle to close bullish before we go bullish on USD card. And if you don't want to wait, go down to 1 hour. Let's see the pattern we had on 1 hour after the formation of this hammer. Let's go down to 1 hour. Okay, so you can see on 1 hour we have what looks like a bullish pattern because this is a spinning bottom. This is a spinning bottom. I believe this bearish move was to clear liquidity. You can see this bearish move was to clear liquidity at this previous low. They know a lot of retail traders would have executed buy after the formation of this candle that looks like a marubuzu. A lot of retail traders would have done what? They would have executed buy. So what they did was to push price down to clear the stop losses at this previous low, and that they have achieved. You can see they have achieved it. Okay, so one could actually risk buying USD card from the current market price, and if you are buying from the current market price, your stop loss must be below this fair value gap because they can still push price down to test this fair value gap. So your stop loss must be below this fair value gap. And if you are buying from the current market price, that's about 40 to 50 pip risk. 40 to 50 pip risk. And if you're risking 50 pips and your first target is at this level, and that's about 70, yeah, about 70 pip profit. So you'll be risking between 40 50 pips to make 70 to 75 pips or more, which is a good risk reward. So that's my take on USD card. This is a good setup. USD card has a good setup, but you could patiently wait for the next 4 hour candle to close bullish. By in the next 4 hour, the major news would have been released. Okay, the major news would have been released in the next 4 hour. Okay, so you could wait for the next 4 hour candle to close before you execute your trade. That's what I would advise. Wait for the next 4 hour candle to close. By that time, the news would have been released and you would have seen the data to know if actual is higher than the forecast. Okay, and if the actual is higher than the forecast, that would be good for the dollar. So you go bullish on USD card. Go bullish on USD card. Okay, so that will be all for this session. No questions. No questions. Okay, so I appreciate you all. I believe you all can hear me. You heard me. Okay, so I wish you guys a profitable trading day. Ensure you manage risk properly. That is the secret of successful trading. Don't over leverage. Okay, don't over leverage. Always apply stop loss on every trade. Before you execute a trade, know the risk. Define the risk. Know the dollar amount you're going to lose on that trade before you execute the trade. And I've always advised that your risk reward should not go below 1 to 2. If you want to be consistently profitable, your risk reward should not go below 1 to 2. By that, I mean for every $1 you're risking in the market, your reward should not go below $2. $2 should be your profit target. So if you are risking $10 on a trade, your target should be $20. If you're risking $50 on a trade, your target should be $100. I hope that is clear. Appreciate you guys for always showing up for the classes. Okay, our next session will be next week, Tuesday. Do have a great day.